Hello, everyone. Thank you for joining us at today's Your Overseas Home webinar. My name is Naya Damasio and I'm one of the property consultants at Your Overseas Home. Today we are going to be chatting with Gillian Richards from Chase Buchanan Wealth Management, and we will just be discussing the financial considerations when you're moving to Greece. It's so great to have so many of you with us here today, whether you're watching live or you're watching on demand a little bit later. Once Gillian shared her presentation, we'll open the floor up to questions. If you have any as we do go along, just please type the questions on the questions tab in the right-hand side of your screen. We are going to hope to answer as many questions and queries as possible today, but if we don't get round to them all, don't worry, any unanswered questions will be forwarded straight to Gillian and the team at Chase Buchanan. Before you do start your presentation, Gillian, please can you just introduce yourself and what Chase Buchanan does?
Sure. Kalispera Sas to everyone in the audience. That means good evening, all, if your Greek is not up to speed. So I'm Gillian Richards. I'm the Regional Sales Manager for Cyprus and Greece, and I have been in financial services for well over 30 years, and I've spent over 15 years in the offshore wealth management industry. So I've been in various places, and currently I am living in Cyprus. So that's a little bit about me. Chase Buchanan. We are a highly regulated wealth management company. We specialise in providing a global finance solution to expats around the world, and we are headquartered and regulated through Cyprus, through the Cyprus Securities and Exchange Commission. We provide, or we try very hard to provide clear, jargon-free financial advice. We offer a lot of support to expats that are moving globally. We support them once they're in their countries, and we do a lot of review meetings, send out regular market updates, and generally we're there to help people settle in and look after their savings, investments, pensions, that sort of thing once they have settled in their new country of residence. So that's just a little bit about us.
Thank you, Gillian. And now the floor is yours.
Okay, so I'll do the click here. Okay, so I've just touched on who we are. So again, that just reiterates what I have just gone through. So our services, so we do offer a lot of services. So we are wealth managers, so we do the full financial planning for our clients. We specialise in retirement planning. We do a lot of investments, a lot of savings plans for people, whether that is for retirement or education fees planning for, school fees for children, grandchildren, university fees, that sort of thing. We can also help with UK and international pension transfers. Quite often when someone from the UK with a UK pension moves overseas, we can facilitate the pension transfer for better tax reasons, tax efficiency, and obviously depending on the countries. And obviously tonight we're talking about Greece. We help with some tax advice. Also, if you are a US connected person, we have a team that are specialists in that area, and they can help you because there's obviously different rules if you're US. And also we can help with life and critical illness cover if that is something that you're interested in once you move and leave the UK. Okay, so oops. There we are. So this is then where some of our offices are. So as I've mentioned, we are headquartered in Cyprus. That is our European office. We have offices in Belgium, France, Malta, the US, Canada, Portugal, the Canary Islands and Spain. And our administration centre is in the UK. So we are very global. Okay, so tax essentials for Greece. So these are some of the topics that I'm going to cover tonight. So it's tax residency, income tax, real estate income tax rates, capital gains tax, dividend income, interest income, and then we're going to touch on the non-dom regime for pensioners, in inheritance tax. And then at the end, we have a checklist of things that you need to do before you make that move. So how are you classed as a tax resident in Greece? Well, the easiest way is to reside in Greece for 183 days. Now, it's not just that rule. Also, you need to not have more than one country of tax residency, because sometimes you may not be in any country for 183 days because you may have been retired or are retired and want to travel. And if you're going on like the world cruise, you could be away for months at a time. So in Greece, they look at other factors to see if you are resident in Greece. So to say, it's not just 183 days. So the types of things that they look at is, what assets do you own in Greece? Where's your citizenship, social security registration, and also if you have children, where do they go to school? So the likelihood is that if you've moved to Greece, your children will go to school in Greece or are at school in Greece. So even though you may not be in the country for 133 days, that's taken into account that your children are at school there. So therefore, you would be tax resident in Greece. And also, if your family spends lots of holidays in Greece, that could also impact your residency. When you are in Greece, you do need to apply for a Greece tax identification number, and then you submit your tax return by the 30th of June the following year. So the tax year is January to December. At the end of that, the tax system opens to register your tax returns, and that has to be done by the 30th of June. And there's always notifications on social media, in the press, as to, and obviously on the website, as to when the system is actually open to do those returns. So this is a slide just to give you an idea on the rates of tax. So this is for all individuals earning any income in Greece. You will pay tax regardless of nationality and your permanent residence. So the personal income rates apply to employment income, pensions, business profits. So the first 10,000, you are taxed at 9%. There is not like the UK where you have a personal allowance. There is no personal allowance. You are taxed on the first 10,000 euros at 9%. Then after that, it goes up. So then for the next 10,000, it's 22%. If it's 30,000, it's 28%. And then on it goes to, if it's more than 40,000, then it's 44%. And then this slide is really quite good because it's working it out for you. So the first level, you're paying 900 euros. For the next 10,000, then you're paying 2,200. So that total is 3,100, and on it goes. So really quite straightforward. Now, if you are lucky enough to have a property that you live in and also own a property that you're renting out, you will also have to pay tax on the income from that rental property. Now, they do give you a tax reduction depending on the work that you're doing to the property. So if it is upgrading the building, energy efficiency, the functionality, and making it much more of a nice looking home, because there are quite a lot of houses that have been run down. So just bringing that back up, you can get up to 40% tax reduction. And again, the rates go up on a scale. So for the first 12,000 euros, the rate is 15%. And then after the next 23, it's 35, and then over 35,000 euros, it goes up to 45. So it is worth noting again that if you are looking for something to rent, then you may want to go for something that you can do up and then rent it out, because you will get the reduction. Capital gains, straightforward. Non-listed shares subject to capital gains at 15%, and listed shares are taxed at 15%. And there's also a 2% stamp duty that's imposed on the sale. So again, you know, if you do have shares, whether they're listed or not listed in Greece, you need to be aware of all of these extra taxes. Dividend incomes, again, you've got income there. It's a flat rate, 5% withholding fee. So again, you need to look at the various shares, dividends, and when we come on to interest as well, because there are more tax efficient ways of saving your money, or, you know, or getting income. Just touching on interest income. If you've got money on deposit in the Greek banks, whether it's interest on bonds, treasury bills, there is an income tax of 15%. And even if you're non-resident, so you can be exempt from the withholding tax if the deposit is not in euros. So that is interest. You know, if you've got can open a bank account in Greece with, say, a sterling account, and you hold your money there, you're not going to pay that tax. If it's all in euros and it's in the bank, you will be. Oops. Okay, so I touched on there the first slide about the income tax, and that's really for any income that is derived from Greece. So, you know, if you've been working there or you've got pensions there, you cannot get away from that tax, those tax rates. If you are non-dom, so you're non-domiciled, so, and most people from the UK are UK domiciled, even if you live in Greece, your residency may be Greece, but your domicile will be the UK, unless you go through specific measures to change that, then this non-dom regime for pensioners will kick in. This is a 7% fee on income, so it's 7% tax, I should say, on foreign sourced income. But there are rules to this. So it's fine when you start off living in Greece, because you can go for this 7% rate for if you haven't been a resident in any 5 of the last 6 years. So that's fine. But then you just need to be aware that when it comes to your 6th year living in Greece, you then fall into the other tax regime with the sliding scales. So it is something you do need to be aware of if you're making that move to Greece. Okay, pensioners subject to this regime, you're required to declare the income earned both in Greece and abroad. But strictly speaking, I mean, most people, if you've retired and you've gone to Greece, your income is going to be coming predominantly from the UK, from UK pensions, and obviously the UK state pension. So that's basically those bits on tax. I've put in inheritance tax here because this is quite interesting. There is forced heirship throughout Europe. It's an EU directive. And Greece has taken it a little step further in that you're assessed on the current value of the property, and that is both movable property and immovable property. So immovable property is the real estate, it's your home, it's your rental properties. The movable property is things like assets, money in the bank, cars, works of art, jewellery. So it is worth remembering that. Now, depending on which category you fit in will depend on the amount of tax that's paid. Now, obviously, it's inheritance tax, so you will not be paying it, but your heirs will be. So that is important as well, because if they've got a big tax bill because it's all in property, then it's how do they pay it? So you just need to think about these sort of things. So just a couple here. It's like if you're category A, that is your spouse, children, grandchildren, parents. So basically anyone apart from your spouse is a direct line for you. So it's your parents, you, your children, your grandchildren. And that is the lower rate. So that's between 1 and 10%. The tax-free amount is €150,000. So once you get to that, it then goes up depending on how much over the £150,000 euros, sorry, not pounds there, that you would, sorry, not you, that your heirs would pay in inheritance tax. Category B is basically it's children from your spouse, your former marriage, parents-in-law, brothers, sisters, uncles, grandparents, great-grandparents, great-grandchildren. Okay, and then again, you can see the amount of tax to pay goes up and the tax-free amount goes down. So here it's anything over €30,000. And then you have a category C, which is basically distant relatives or, any friends, anything like that, any colleagues, anybody else that you want to leave an inheritance to. And then again, that rate's gone, tax-free amount's gone right down to €6,000, but the tax on it has gone up to between 20 and 40,000. 20 and 40%. So it is worth planning. When you move over to Greece and you're settled, you should see a lawyer to make a will, to stipulate who you want to leave everything to. It makes it all nice and simple so that, when you have passed away, there are no problems for your heirs and your estate. Okay, and then checklist. Now, it is important that you seek financial advice before you make the move to Greece. You should, if you have a UK advisor, you should go and see them, should let them know that this is what you are planning to do. You should get up-to-date valuations on all assets, all investments, all savings, so you have all of that there. As soon as you leave the UK and go into Europe, your UK advisor will not be able to advise you. That is a consequence of Brexit. A lot of people think they can carry on because they've known that advisor for years. That is something that they cannot do because of the indemnity insurance. They won't be covered for giving you any advice if you are not a UK resident. It's good to have everything there together with you in a folder that you've got or online access that you can get, so that when you come over and settle in Greece, then that your new advisor can actually go through with you and then could make some changes to make it much more tax efficient for you. There are lots of ways to avoid the interest tax, dividends tax, that sort of thing. So it is important to plan. And we talked about estate planning as well. So it's just really important that you get as much information on your assets, on your investments before you leave. Have those statements with you so that when you speak to someone, they can just go through it and then they can say, yeah, okay, yeah, we can leave this. No, you need to move this. It's more tax efficient, but you must do that. Okay. Otherwise, you could be really in hot water once you have settled into your new country, and in this particular time into Greece. Okay, I think that's the last slide. Yeah, so as I said at the very beginning about Chase Buchanan, we try and speak jargon-free, go through everything very clear, concise, to make sure that you understand everything that we're saying to you. And as we have here, trusted advice made simple. That is our slogan, and that's what we stand by. Okay. And if anyone wants to have a meeting with me or contact me after this presentation, my contact details are there, and no doubt Niall will say that as well.
Thank you, Gillian. Definitely, you can get in touch with her after this. But thank you for all the insightful tips and the advice. I think you've really made it clear just how important it is to get that financial advice, especially before you move. So thank you very much. Now we are going to have some time for some questions from the audience. We've got Greg, who has asked us, is the tax reduction on rental property only, or can it be claimed on your primary residence?
No, that's for rental properties. Well, so if you live in your own home, there is no income. You're not getting an income from your home. So that's part of the is the real estate tax is on renting your property out.
Okay, I think that's been made a bit clearer now. We can discern. Thank you, Gillian. We've got David, who has asked us a question. So the 7% flat rate that retirees have, is that a tax rate limited to 5 to 6 years?
Yeah, so one of the criteria to have that tax rate applied to your income is that you have not lived in Greece for 5 out of the last 6 years. So when you get to year 7 and you've been there for 6 years, you're going to move away. As it currently stands, you're going to move away from that 7% regime and go to the fixed one with the tiering. So it's important when you're starting off that you know that.
Okay, thank you.
But again, with everything, all the rules keep changing. So that's what it is today.
Thank you, Gillian. Kim has asked us that regarding inheritance tax, we said between 1% and 10%, once tax-free amount of 150,000 euros. How do you actually calculate what that amount actually is?
Oh, there's a lot more detail to it. I've just put up the high level there just to go through. So obviously, the higher the rate. The higher the assets that you have over the 150,000, then that rate will go up. As I say, there's a lot more to it, but it would take up too many slides to just put it all through. But again, do you say it was Kim that asked that question?
Kim.
Yeah. So Kim, if you want to get in touch after, I can go into more detail with you.
Thank you, Gillian. David has asked us, how do you avoid income from shares and pensions being taxed in the UK before receipt in Greece?
How do you avoid paying tax in Greece? Was that the question?
How do you avoid income from shares and pensions being taxed in the UK before receiving it in Greece?
Okay. So the pension bit is easy. Well, they're both easy. So basically, Greece has a double taxation treaty with the UK. So what that means is that you don't pay tax twice on the same income. Okay. So if you've moved to Greece and you're tax resident in Greece and you've got a tax identification number in Greece, you would apply to HMRC for what they call an NT tax code, which stands for nil tax. And then you will not be taxed at source in the UK. But you would then declare that income to the Greek authorities when you do your Greek tax return. The dividends and the interest, it's literally just down to what you're invested in. So if it is in the UK, you're going to get taxed on the interest in the UK. So that's why you need to talk to a financial advisor once you move with all of your assets, so that, like myself, we can sit down with you and we can go through and say, actually, if you move it from there to here, you're not going to pay any tax. You have no tax liability on the interest, the growth, or the dividends. So that's why it's important to get all that information, all your statements with you when you leave the UK.
Yeah, I think that's been highlighted, that we really do need to just make sure we're prepared before we make that step.
Exactly. It's like, when you're packing up your home and you're moving it all, you've probably got a list of all the things that you need to do. Well, just add that to the list.
Exactly. Just have your checklist and be prepared.
Yeah.
Mario has asked us a question. Does the non-dom income tax apply to income generated from remote working when in employment outside Greece as well, or is it just pension purposes?
That is just purely for pensions.
Okay. Thank you. And we have another question from Greg. Does Greece have a double tax treaty with Canada?
Oh, now that is a good question. And I'm not sure. I did have a list and I don't think I have it with me now. Can I get back to you, Greg, on that one?
Lovely. So she will get back to you, Greg. Good question. Paul has asked us another question. It sounds as if you should take your tax-free amount from your UK pension before living in Greece.
Yeah, if you're of that age, it's one of those questions that, yes, probably, but it's down to each individual because you may not have a need at that point. So there are other pension vehicles that you could use that you could reduce the tax liability if you didn't take it then. So again, it's an individual, but generally people do tend to take it before they leave the UK. But again, it's circumstances, it's individual circumstances.
Thank you again, Gillian. And last but not least, Laura's asked us a question. Does Chase Buchanan have offices in Greece?
I would really love it that if we did. Unfortunately, we don't at the moment. We have our head office in Cyprus. So from Cyprus, we look after Greece and the Greek islands. So because it's not that far from us. So yeah. I wish.
That's another fun fact today then. That's really cool.
Yeah. Cyprus is lovely as well, and it's and we have lots of Greek flags, and the language here is Greek and English. So
yeah, that makes sense.
Yeah.
We've got one last question before we wrap up, and that is from Paul. Does Chase Buchanan charge set fees?
No, we don't say like charge a set fee. It really depends on what it is that you're looking to do, and then we would look at the best solution for you, and then it really depends on what it is that we find our solution is for you, and then it's how much time and effort. It depends on the complexity, but we don't have set fees.
Thank you. I think that clears that up, Paul. We are going to leave it there, everyone. Thank you so much. That's all we have for today's session. But thank you, Gillian, for sharing your knowledge with us today. And thank you to all our listeners for joining us. Oh. We strongly recommend that you do get in touch with Chase Buchanan directly just to discuss your requirements in more detail. So we will be in touch with their details shortly as well. Before we do finish, I would like you to invite you to leave us a review on Trustpilot if you did find this webinar helpful. Thanks again and happy property hunting. Thank you, Gillian.
Thank you. Thanks a lot. Bye, everyone. Bye.